please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. As promised, let's try and reconnect with Sanjay Pattnaik, the MD of Tata Sponge. Mr. Pattnaik, good morning.
Good morning.
Okay, so my colleague was trying to get what the realizations of the company were in Q1 and your outlook on realizations for the full year.
The realizations have been very good. In fact, in Q1 it was about 21,200, which was by and large the same as Q4 of FY18.
Okay. And you expect it will remain that way or do better?
It won't remain at that stage, but it has already softened. But I would expect the realization over the year would be better than the previous year.
Okay.
By how much? And how much is it softened by?
Right now it is softened by about 1,500 to 2,000 rupees a ton.
Okay. How many volumes did you do in Q1?
In fact, we clocked 116,000, which is the best ever quarter. And quarter on quarter, the volume increase was about 10%.
You have a target for the year?
We have targeted 425,000 tons, but maybe we would exceed that. The plan that we have set for ourselves is 425, but I think this year the production has been good. There has been some excellent efficiencies, operating efficiency, which has kicked in, and I'm sure that we will cross our target.
Okay.
What was your EBITDA per ton in Q1?
Q1, our EBITDA per ton was about 8,000 rupees, close to 8,000 rupees a ton.
Maintainable, you think, for the year?
By and large, I think this year would be good, because Q2 always is the weak quarter, but then Q3 and Q4 I expect things to improve, and overall I would imagine overall FY19 would be a good year for us.
Okay.
You've also, your board has given an in-principle nod to set up a 1.5 million tons per annum capacity in Odisha. If you could tell us what is the capex, when is it likely to come on stream, and how much could it add to your overall revenues?
The board has given an in-principle clearance to apply for the environment clearance.
Okay.
The entire process, the environment clearance takes the longest time. So therefore, we have got an in-principle clearance for getting the environment clearance and other statutory clearances. But the board has to approve the project, and only after the project is approved, then we will start the activities on the ground. Right now it is being evaluated, various options are being evaluated, and we are quite close to taking a decision.
Okay. Any idea what the capex might be?
We do not want to leverage our balance sheet too much, and I think the capex would be in the region, it's still being worked out, the numbers are being worked out, but I would imagine it would be in the region of maybe 2,500 to 3,000 crores.
Okay.
Mr. Pattnaik, just one final question. Are there any synergies either with Tata Steel or Tata Metallics? Would a merger make sense of Tata Sponge with them?
Look, Tata Steel, obviously the product mix has to complement the overall product mix of Tata Steel. So we would be working with our parent company, and the product mix has to fit into the entire overall Tata Steel and the group companies.
Okay. All right, we'll await word on that, Mr. Pattnaik. Thank you very much for joining us with a wealth of details. But we are not going away from metals. We're looking at the metal cycle itself, because year to date, if you can get the NSE metal index, that index is down 30%. It's a big fall year to date. Is it related to the commodity cycle? Alistair Ramsey, the head of research of Metal Bulletin, joins us now. Good morning, Alistair. Thank you very much for joining us. Let me start first with aluminum. After that sharp rise during the initial ban on Rusal, Aluminum has actually fallen very sharply. Is that fall over, and what's your forecast for the metal for 2018?
Our perspective on aluminium, I suppose, is a little bit more bullish than the consensus, at least through the next year. So we think there could be some modest recoveries in prices through the second half. There is a sense that demand in markets such as China are starting to slow down, but they still remain largely more positive than people, I think, gave credit for earlier on in the year. So the prospects for prices are slightly better, that's what I should say, higher than I think the consensus views, which are a little more negative after the climb down in prices most recently.
Okay, more generally, do you think the ferrous and the non-ferrous cycle has peaked? The upturn in the cycle started through late 2015. Is the cycle now turning down?
This is such a great question, Latha, that we're obviously trying to focus on metal by metal. And I think in a general conclusion, no, it's by no means over. One of the things with steel that we look at are the impacts on fundamental developments when we see prices change, or if prices, as they have done recently in steels, surpass a little bit our expectations, particularly within China, if not so much in China's export markets. What we should be seeing is a massive surge in stock levels, a real decline in apparent consumption levels, but it's really not happening at all. It's been amazing, the strength, the demand pull for steel and metal in general in China. We have data through June so far, early parts of July. There is an element of saying people are robbing from Peter to pay Paul. We have winter cuts that people will be familiar with on your show, which started last November through March. That caused quite a stir in prices at the time. There's an element of preparation for that. So I suppose people are buying a little bit more in advance, and that's maybe slightly inflating the situation. But no, it's not really the case at all that this is the end of it from our perspective.
Okay, that's a very bullish statement, Alistair. Now, on to a separate issue. There are fears that due to the trade wars, steel from the tariff-affected countries are getting dumped in countries like India. Have you seen evidence of that?
There has been evidence of redistribution, if you will, of trade flow over the period you mentioned. So this latest trade war issue is part of a situation that really began in 2015. We've seen an increasing share of the world's surplus supply, as it were, going into these growing markets of Southeast Asia and also of India. But I think at the moment the situation is somewhat different in that there are trade wars pending or even underway as we speak. But the penalties in these wars are, in the case of the United States, 25% import taxes. That means next to nothing to either an importer of steel in the United States or of an exporter to the US. So it's not as if there's going to be a sudden change anytime soon.
Okay, he's not calling it dumping, but he's saying it's a redistribution of steel from the tariff-affected countries into India. What's your own estimate, Alistair, of landed prices of steel in India? Do you see them falling either on account of dollar strength or the demand-supply situation?
Our perspective on the Indian market, at least in the domestic market, is that prices will pick up a little bit between the third and fourth quarters of this year, and that's in part reflecting the international patterns that we see in a lot of domestic markets. When it comes to the landed prices in India, we're predicting a slightly different trend, because we still anticipate that the key export markets to India we'll see a price decline through the fourth quarter. So material arriving in dollar terms into markets such as Mumbai should be somewhat lower than it is today.
Oh, landed price will be lower. Then what is your exact estimate of domestic steel prices in India?
Very, very slight pickup between the third and fourth quarters. There's a possibility that in general in most of the markets that we cover, there will be a little bit of a pickup in the autumn season in the northern hemispheres, and that will have some impact also on markets which are in quite different parts of the world. They are getting closer together. The pricing patterns from one region to another are becoming slightly more coherent than they were in the past, even with this threat to trade, which is quite interesting.
Alistair, thank you very much for your thoughts on the global metal situation. But let's drill it and get it back closer home. Rakesh Arora, the managing partner of Go India Advisors, joins us now. Rakesh, we just heard Alistair of Metal Bulletin, where he indicated that perhaps the upturn in the steel cycle is not over. It may not have peaked. Up until now, when we last spoke to you, you were a bit cautious in the sector. Your thoughts now on the situation?
See, there are three factors which are influencing the commodities market. And the first one we have been harping for quite some time at your channel, that last year, because there was national elections in China, a lot of demand was pushed ahead, and we saw more funds being rolled out into infrastructure, etc. in China. And then came the winter cuts, so the rally got extended. But post Chinese New Year, things have not been that rosy. The demand hasn't really picked up at the same pace which was before the Chinese New Year.
Okay.
And that has been playing out. In fact, if you look at the June numbers, Chinese exports have jumped up quite materially. So the domestic demand in China is pretty weak. And China is 50% of global market. So if China is weak, global market is weak.
Okay.
Now, apart from China, if you look at the manufacturing PMI, that's also been declining for US, for advanced countries. So demand is getting weaker, and if you add trade war, etc. onto it, it means you have to get out of the sector.
Okay. Well, that was a different view from Alistair. Alistair doesn't believe Chinese demand is slumping. But let's drill it down to the Indian companies itself. So you will see domestic steel prices declining. If you were an investor in domestic steel stocks, is this caution time? Actually, to put it on the table, the metal index itself has fallen 30% year to date from a peak of the peak in January. What's your take on individual steel companies?
No, so see, first of all, I would say that there was euphoria, and people expect at the peak of the market that things will continue forever. This is just a reality check that it is a cyclical industry. It goes up, it goes down. So to that extent, there is a little bit of P contraction. I don't think earnings have contracted as yet.
No.
And for steel companies specifically, I think FY19 could still turn out to be a good year from earnings point of view. And we might see possibly a short-term rebound also in stock prices, because they've fallen quite a bit. I mean, Tata Steel has fallen from 700 to 500.
Yeah.
So that's a huge decline, whereas earnings are going to still keep going up. And also remember that these stocks will look the cheapest at the peak of the cycle.
Okay.
It's always other way around in metal companies. So my call would be to sell on rallies rather than to buy on dips. And also one need to take a call on trade war. If one is confident the trade war is not happening, then maybe one can hold on for some more time.
I think the bigger factor is the way in which there is a change of ownership in India. Now Tata Steel will have Bhushan Steel and maybe even Bhushan Power with it, from the look of things. We probably are going to have Arcelor and SR Steel. We don't know that. That battle is very, very nebulous. So is there, the last time Tata Steel made an acquisition, it was the start of the downfall. Now do you think that it will be able to make good with this acquisition and become more robust?
No, see, So if you ask about acquisition, these are good acquisitions from a long-term perspective. But in the short term, what happens is that there are two impacts. These were ailing companies. They were not operating at full capacity. They were operating at a very low capacity utilization. And having paid the amount they have paid, obviously they will try to increase the production as early as possible. So that increases the domestic supply and puts pressure on domestic prices. So that is part number one. Number two is that whatever they do, initially the numbers will not look that great because interest depreciation will kick in much ahead of EBITDA. So all these things put together, near-term earnings will be under a little bit pressure, both from higher supplies in domestic market, as well as higher interest and depreciation that they will have to now bear given these acquisitions.